Good afternoon, traders and investors. Will back here with another one here, coming to you with another video here Tuesday after the close. So another green day on the markets here, but it did go back and forth a majority of the day. In the end, SPY and QQQ closing green here, but we did have a little bit of a pullback here in financials and healthcare, but everything so far still looking healthy. So in today's video, guys, we're going to go over our two earnings that we have for you guys today. We're going to do Crowdstrike, another cybersecurity play after yesterday's play on Zscaler that we recap. Crowdstrike came out and had some very good earnings themselves. And then second, we are going to do Intuit. Intuit, not a very known company in terms of a retail pick, but a very, very solid company in the markets nonetheless. So we'll take a look at how they're doing as well. Then obviously go over our technical analysis here on our major indexes, our major tech names, and lastly, a look into my portfolio. Took a few trades here today, guys, but still one of those days where there's not a lot of volatility in the market, not a lot of action here to be had. So I did go fairly light on the positions here, just letting what we have ride currently here until some better deals present themselves to us here, guys. So without further ado, let's get right into it now. And as a first glance, we're going to take a look at our first earnings here, Crowdstrike. So Crowdstrike here, guys, as you can see, after the close, pretty much earnings went down a little bit, then ending pretty much flat here from the close. Not too big of a deal here, only down roughly under 1%. But as the news came out, they did go down as much as 6%, recovering almost instantly, as you can see here, guys. Very good earnings by Crowdstrike, if I do say so myself, guys. On technical positioning, this company has risen a lot since the beginning of the year here, guys. We're talking gains of over 120% on the years here so far. So Crowdstrike has had a very, very good recovery from its bottom and well now on its way, starting to move back to all-time highs, still about 28% off the all-time highs. This company has been performing very, very well as of late. A bit overbought, in my opinion, to be starting a position here. I would be looking for a bit of a pullback. The lower 180s to 170s would be a target position for me. 212 is kind of a bit rich for me to be starting any positions right here or any short-term options plays as such here, guys. But I was very pleased for the earnings here in terms of the company's long-term growth perspective. So as you can see, they did have a double beat here, beat on revenue here by about 1% and beat on EPS. That was the big one here by about 10.5% here. Crowdstrike, still a company struggling with profitability, but their growth is leading to the fact that they will be profitable here probably within the next 12 months on a consistent basis. You can see on a quarterly basis, they just had their last 2 quarters of profitability. And with this quarter that ended today, we did have another third quarter in a row of profitable net income here. So very, very good. As you can see, this company has struggled with profitability in the past, but now another one of your cybersecurity plays coming into consistent profitability, guys. And that is the key metric here that we were looking at. We also looked at the same thing with Zscaler yesterday. So without further ado, let's get right into the earnings here. So moving into it, guys, I'm going to take you right into their financial overview here, right from their earnings, pulled directly from their investor presentation slides here. As you can see, rapid growth of ARR. If you guys don't remember from yesterday's video, that's pretty much annual recurring revenue here. So very, very nice growth here in their subscription model. This is another company that runs subscription models. They obviously sell cybersecurity services here. So as you can see, on a quarterly basis, consistently increasing their customer base. 35% ARR year-over-year growth. Very, very good, strong growth by Crowdstrike here, right? Strong revenue growth. You can see annual revenue as well. 55% subscription year-over-year growth. Very, very, very good revenue expansion here, right? 94% of their revenue, as they label right here, is from subscription revenue. Very healthy year-over-year comparatives, guys. And as you can see in their forecast here, I'll take you down the forecast in terms of net earnings, right? You can see here on a net EPS basis now, we're expecting just under $3 here for the conclusion here of fiscal year 2023. And into 2024, you can see, guys, that they are increasing this at a very, very high pace here, guys. Pretty much 20% plus in EPS growth, right? 20-30% EPS growth for the next couple years, guys. So very, very, very strong position by the company in itself here, guys. We're going to go down to a bit more very strong gross margins as well. So the non-GAAP gross margins standing all the way up near 80%. That hasn't changed in the past couple of years. It's exactly what you want to see. And as they continue to scale their revenue and their costs remain fairly flat, their cost of gaining extra revenue is not the gist of where the costs are coming from. The costs are coming from mainly research and development here, guys. So as they can become a more mature company, those costs will basically streamline. And as your revenue increases, they'll be able to bring more and more of that revenue to the bottom line. And that's what we're expecting here from a lot of our cybersecurity plays as the advent of AI continues. And companies require more and more of their services to protect data in the cloud here. Increased profitability as well. You can see that annual non-GAAP operating income is up 81% year over year. So very, very, very good boost in the bottom lines here, guys. Percentage of margin, you can see down here, they went from 7% all the way to double that now for the end of fiscal year 2023, up to 16% here. Very, very, very solid gains in their operating income. That's their bottom line. They've been investing in innovation, as you can see. Most of their expenses here are coming from the annual expense in research and development. So their R&D expense is up pretty much here in a steady streamlined growth fashion. But as I was saying, guys, the percentage of revenue is mostly staying the same. So as it increases here, their costs will not balloon. This will actually get smaller and smaller. And that's pretty much what the guidance they gave. They gave very, very strong guidance as well. And here's your cash generation. We were looking at Zscaler yesterday and saying that they're generating more and more positive free cash flow here. So you see that as well in CrowdStrike. Annual free cash flow here all the way up to $677 million. So very, very, very good growth here in their annual free cash flow. Nothing bad to say about this. Percentage of margin, you can see that that's fairly flat around the 30% line. That's exactly what you want to see. 53% year over year growth. Very, very good free cash flow generation here, guys. Right. And just a very, very beautiful very, very beautiful research earnings report here from the company. Excuse me. Everything moving in the right direction here, guys. Revenue expansion, operating income expanding, EPS target growth for the next couple of years, which is what you want to see if you're a shareholder, expanding, free cash flow expanding. Everything is moving in the right direction, guys. And as a kicker here, guys, I will show you guys that they have done a few things extra here, guys, in terms of their debt management. So this is the last thing that I want to bring to you guys here is we have to take a look at what is their level of debt. I showed you guys this with Zscaler yesterday, and you will see that CrowdStrike is virtually the same. Very strong free cash flow and cash and cash equivalents here in relation to their long-term debt. This is exactly what you want to see. They've been doing a great job. This blue line here is cash and cash equivalents. They've been doing a great job here of expanding that over the past year here, guys. So the company is not in a position where they're running a lot of debt. So I like this company. It's just a little bit too rich for me right now on terms of the technicals. If it does pull back here roughly to the 180, maybe the 190, all the way to the 180 pocket, that is where I would be picking up a few shares of this company myself. Very, very good company for the long term. Like I was saying, my favorite plays in cybersecurity is Palo Alto Networks, Zscaler, and now lastly, CrowdStrike, guys. They're really in a battle here for the cybersecurity industry. And now our second company that we'll be taking a look into, guys, is Intuit. So Intuit, guys, if you don't know what they do, they run a couple different lines of businesses here. They have your TurboTax software, which is for retail and small businesses in order to file their taxes towards the end of the year. So they provide a lot of tax services, and you guys know that that's a subscription model. So company is a software company. They also have the Credit Karma suite. So they do a lot of credit checking for consumers, and a lot of businesses do pay for that. So they consistently generate fees from not only retail checking their own credit score, but whenever businesses need credit scores checked for consumers, Intuit is also a provider of that as well here, guys. Very, very, very solid business model. And lastly, they do have the whole QuickBooks suite. So QuickBooks, if you guys don't know, it's for small and medium businesses in order to do a lot of accounting, right? So in order to keep their books in line, in order to generate tax revenue and tax slips for the end of the year, Intuit provides all those services in the form of their QuickBooks platform. Very, very, very popular platform for any small and medium businesses out there, guys. So very solid business as a whole. In terms of the stock, guys, you can see that this stock just basically churns gains year over year in excess of the market here. So they do outperform the S&P 500 on a yearly basis regularly here, guys. Very, very strong stock, in my opinion, on a technical basis. Once again, has ran a bit away from us, guys. I really like this stock in the lower 450s, now all the way to about 565. A little bit too rich for me, but if we do get a little bit of a pullback, I will be most likely making potentially a couple shares here if we do ever pull back in a lower $520 to $500 range. But now the stock does seem as though it does want to make new weekly higher highs and higher lows. You can see weekly downtrend was set and now reversing potentially for a weekly move higher here. So if we do get that little pullback, 530, 520, I may just be looking to add a few shares and ride this into the end of the year and into next year as well. So as a whole on earnings, guys, very good earnings by Intuit, guys. They rarely ever miss, guys. You can see all of these green earnings checks, right? So only very rarely do they ever miss earnings. Usually they're in line and they always increase guidance. So very, very good. This time was virtually the same. EPS beat of roughly 25% and a revenue beat of roughly 3.5%. Very solid report by Intuit as well here, and we'll get into it right away. Intuit reports strong first quarter results and reiterates full year guidance here. Very, very, very good. So here you go from the CEO. We had a very strong first quarter, starting a fiscal year with momentum here. With data and AI core to our strategy, we're accelerating innovation across our global financial technology platform to power the prosperity of consumers and small businesses, their target audiences here. Look at these numbers, guys. Grew total revenue to $3 billion, up 15% here. Increased small businesses and self-employed group revenue to $2.3 billion, up 18%. Online ecosystem revenue growth, 20%. Credit Karma, however, down 5%, guys. That is a bit normal as people have been taking out less and less loans over the past year because of the interest rate increases. And that's exactly what they were saying on the call pretty much. This is the reason for your Credit Karma line of business coming down ever so slightly, but that's okay, guys. That's more of a cyclical thing, whereas their tax services and QuickBooks, that's pretty much year round. People have no choice to do their taxes, right? They grew the consumer group revenue up 25% and increased pro tax group revenue up 24% here, guys. So very, very strong. Look at these numbers. Let me blow them up for you, right? So on a year-over-year basis here, guys, we have a revenue change of 15%, operating income up 45%, guys. That's absolutely beautiful here, guys, right? On a year-over-year basis. And then EPS, we had a 49% boost here, year-over-year comparables here. So very, very, very good on non-GAAP basis here, which is what we're looking at here. So very, very solid. Everything that we look into, guys, every single line of business except for Credit Karma essentially grew, right? So the QuickBooks software I was talking to you about, 19% in the quarter here. Online services revenue, 20%, right? Growth in payroll, MailChimp, and payments. Total international online ecosystem grew 16% on a constant currency basis. Very, very good, right? Decline in Credit Karma revenue was in the quarter was driven by headwinds in personal loans, auto insurance, home loans, and auto loans, partially offset by growth in credit cards and Credit Karma money. So that is a bit of a moot point here. Consumer group is also up as well. And in terms of the capital allocation, guys, absolutely insane cash position here, guys. Reported a total cash and investment balance of approximately $2.3 billion and $5.9 billion in debt. So a bit of an offset here. They do have more long-term debt than they do have cash on hand, but still fairly solid fairly solid position for them. Really no red flags from what I can see either. They do also do share repurchases as well. Repurchase $603 million of share and $3.2 billion remaining on the company's share repurchase authorization. So all in total, going to be close to $4 billion here in share repurchases, guys. Everything is looking very, very good. And they reiterated very good guidance for the next year. Check out this guidance, guys. Revenue guidance, 11 to 12% up. Operating income guidance, 15 to 18% up for the next fiscal year, right? Diluted earnings per share, growth of approximately 11 to 15% for the next year, guys. Absolutely amazing. And you can see in most of their lines of businesses, they are forecasting growth as well here. So no red flags for this company at all. I will reiterate, one of my very favorite companies in terms of more of a defensive company, more of a company that you can always count on to kind of deliver on earnings and whatnot. In relation to, I would compare this kind of to like an S&P Global, right? SPGI or MSCI, just a very solid company that just has a relative wide moat here to where they provide services that are not very easy to replicate. They're a very established player in what they do here, and they just consistently keep growing revenue, and EPS is a very, very friendly stock for value investors. A little bit too rich for me. I will be looking for the weekly technical pullback here, potentially adding some shares in the 530 area for an eventual rise. And you can see, guys, they're well pretty much on their way here to a new monthly uptrend here. So we'll be very curious to see how Intuit develops. So that's pretty much all we had for earnings today here, guys. Let's get right into our technical analysis on our major indexes and tech names. Nothing much has changed. So yesterday we were saying that there's a little bit of cracks showing in big tech here. Not much, just to kind of generate a clickbait title for the video. But all in all, guys, we're really just chilling here at the tops here, guys. Very, very good consolidation by the bulls. 1, 2, 3 legs up by the bulls. At this point, you now have a daily bull flag, right? I can say any pullback, guys, into this green box is most likely going to get bought by the bulls 450 all the way down to 441. I will remind you, 4 hour 12 EMA, this yellow line is still your guide. Bears unable to capitalize again today. They had it at the open, and now bulls come marching right back here and just grind the price higher. So this is a bull flag. The bears just not able to get it done. This support zone is really acting very, very strong for the bulls here. No red flags whatsoever. And on your weekly chart, weekly move just is simply continuing, guys, until we start getting a more meaningful pullback here. Your weekly consolidation has not started here. So bulls still in full control. QQQ here up 0.26%. Sorry, let me do the heat map first. You can see on the heat map, right? Very mixed market here today, guys. Couple big names down, NVIDIA and Amazon most likely here. And on the upside here, Apple, Google, slightly flat, but Microsoft, Meta, and Tesla performing very, very well. All in all, fairly mixed market. Financials and healthcare was down a little bit. You can see very, very big mix of names here. So you have a lot of rotation going on in the market right now, which is what you want to see, guys. Everything is fairly stable here at the highs, not a lot of volatility. And on the one-day relative performance, you can see the market was fairly mixed as well here, right? So everything is pretty much in the green, everything except for financials, industrials, and healthcare to the downside. Everything performing very, very well. But as you can see, guys, not very big numbers in terms of weekly performance. The markets have just been relatively flat, just holding gains right now. So we're waiting for that volatility to increase in either direction. Now, QQQ, guys, QQQ also no red flags as of yet, right? 1, 2, 3 bull legs up here. So now we are just consolidating here, still looking for another daily higher low. Anything above 380, 330 is just going to be another daily higher low. If we do somehow pull back here more, well, 385 down to about 375 is going to be your area where I do think the bulls step in. That would be for some weekly consolidation here. But as of now, guys, no red flags whatsoever. Keep an eye once again, your 12 EMA on this 4-hour chart, guys. Once again, on the morning, they tried for it. The bears tried for it. They had a little bit, and bulls just come right back marching into the close here. So no red flags whatsoever. Still looking like a very nice bull flag here. Wouldn't surprise me here, guys, if the bears don't step in. We are just going to put in another leg higher here. Now, XLF financials. XLF, another day of consolidation here. Pretty much flat on the day, right? And XLF doing the same thing, right? 1, 2 beautiful legs up. Now consolidating sideways. The bears have had all the opportunity in the world over the past couple of days to try and drop this in a significant manner. They just have not been able to do it here, guys. The bulls are too strong, playing too good of defense here. If we do pull back, this is the pullback zone right here, 35 all the way down to pretty much 34. Keep an eye on that. Once again, the 12 EMA on your 4-hour time frame is your guide. Bears not able to do enough damage here to create some downside momentum. So as of now, we are just pretty much staying flat. This is a bull flag pretty much for some further continuation here. And on the weekly, obviously, we are still looking very, very, very healthy as this weekly move until the bears manifest themselves here a bit more. Weekly move is just not finished yet. So overhead resistance is set pretty much now $36 to $37. Now let's move down to healthcare. Healthcare consolidating more than others, right? And healthcare is now coming down to our sweet spot area that we said it may come down to 129. Your moving averages are there, and previous resistance, which is now support, is also going to be there as well. So look at this for the reaction zone, guys, here. 129 all the way down to 128 pretty much is going to be that area where I expect the bulls to play in. 1, 2 very nice bull legs up. Looking for the daily higher low. Anything above 124.50 is going to be for a daily higher low. For further continuation to the upside, expect a reaction in this zone right here. And this is what I mean. Now the bears are capitalizing on this move to the downside here. Loss of the 12 EMA by the bulls on the 4-hour time frame here. And on the hourly, you can set that they've now set a very nice hourly downtrend. So it remains to be seen how much the bears are going to put into this. But I do expect them to encounter quite a few bulls here in the 129, 128 area, as we are looking for weekly higher lows for weekly trend change as well here. So no red flags on healthcare whatsoever, just consolidating more than the other sectors. IWM Russell still maintaining the tightening range here sideways. So like we were saying yesterday, guys, we are going to look which direction this breaks. IWM Russell is going to break whichever direction the market breaks here. So if SPY breaks to the upside here, in my opinion, IWM Russell is going to follow here. IWM Russell pretty much just waiting around for the rest of the market here at the same time, right? So if they break to the downside, however, well, you will have your much needed weekly consolidation. Was a very beautiful move off the bottom here. Weekly consolidation could bring us down into the mid 170s here. Then I am expecting a weekly uptrend reversal for the bulls here. That would be your first weekly uptrend since pretty much the month of May and June here. So still looking out for it. No red flags as of yet. We're still just waiting for this tightening range to break. And like I said, guys, I do believe that that will be highly dependent on which direction SPY and QQQ do break after their consolidation that they've been been in for the last couple of days here. So no red flags on IWM yet. Just keep an eye on this level, guys. 175 is going to be crucial for the bulls to protect. Lose this, guys, you lose the daily uptrend pretty much, and then you are just into weekly consolidation, potentially down to 174, 173 area. Now, lastly, Dow Jones. Dow Jones performing very nice here today, up 0.25% here, guys. So the Dow Jones, as opposed to SPY and QQQ, has been pushing up the past 5 days. You can see that SPY has been roughly flat 4 days. QQQ has been roughly flat for 5 days. The only one that's been significantly pushing up, well, there's two actually. Financials have been doing a great job of pushing up here, but the Dow Jones is our winner here. Dow Jones 1, 2, 3 beautiful legs to the upside. So any consolidation down will just be for a daily higher low, anything above 34,820. Enough space for the bulls to set a daily higher low for future trend continuation here. Now running into our resistance area, you can see, guys, we're pulling up into it, guys. 35,600 is going to be the area to watch. If you do break that, guys, the next one is all the way, or all-time highs, all the way up in the 36,500 range. Bulls with so much space for a weekly pullback. So even if we do get an extended pullback here, target this green box right here, guys. Very, very big support. 35,000 down to 34,400 pretty much, guys, for a nice little reaction zone for the bulls. If ever we lose the daily uptrend, that would mean weekly consolidation. I do think the weekly bulls have a nice chance of playing some defense here and then going on to smash this high if ever they don't get it done right away in a V shape. So very, very good performance by the market as a whole. Now let's move down to big tech. So big tech, Apple with a little bit of an update here. After consolidating for a few days, Apple just pretty much remaining flat here, kind of inside Friday's and yesterday's trading, if I do say so myself. So Apple still in search of that daily higher low here. Any move down going to be for a daily higher low above 165.75 here. Tons of space, obviously, to set that, guys. My sweet spot for Apple, if we can pull down to the 185, 184 area, I will be looking to add some Apple shares in that area myself. Now, we are also looking for a weekly consolidation. If the daily downtrend somehow continues here, we'll be looking for a weekly consolidation at the same time. Bulls with tons of space, same level, 166 area, right? Anything above that for a weekly higher low for further move to the upside here. Apple doing a great job here of setting up for the weekly trend reversal. No red flags whatsoever. Still just consolidating sideways here. And we are kind of using this previous area here, the whole 189 area, right? That is why we're kind of reacting from this zone. You also have your 12 EMA right down there. So very, very good job of the bulls of playing defense. Once again, failing to lose the 12 EMA in a significant fashion. We were talking about this yesterday, how they lost it first, and now look, they're still hugging it, guys. The bears can just not get enough momentum. Now let's move down to AMD. AMD, same concept, guys. AMD bears, they try, and they just fail. AMD down 0.52% on the day, but I want to bring your attention here, guys, right? Any move down is for a daily higher low above 118.25. So bulls with tons of space to set that and potentially set a new higher low. Tons of areas of now support. So we have new support in this whole range for AMD. We're talking between 120 and pretty much your 115 area. That is going to be a very, very nice area of congestion, which previously acted as congestion in the market all the way back here. I do expect that to act now as support for AMD. So very normal that the bears have been struggling to kind of breach down into this area. We also have your 12 EMA right there. But keep an eye on this, guys, right? The 12 EMA on the 4-hour chart, guys, all the time playing defense. This is just the bulls playing an absolute beautiful game of defense here. So AMD, no red flags whatsoever until we don't get more meaningful daily consolidation, guys. The weekly consolidation is still not started. So this weekly move is still going, even though we're not making new highs, still struggling a bit in the 124 area here. The next area of resistance is going to be your 130s, obviously here. But as of now, bulls, no signs of slowing down. If we do get more meaningful daily, you guys know I've mentioned this in the past. 115 down to 110 is the area that I'm going to be targeting to write some options. But as of now, no red flags. Amazon also pulling somewhat of a same chart as AMD, right? If you look how these two are moving towards the top, it kind of looks the same. Amazon's area of consolidation here, 145 down to 140. Amazon doing a great job here of playing off that area, not letting the bears getting too much ground. The line in the sand level for me is 139.53, right? Most recent daily higher low here, right? So anything above that is just going to be for a daily higher low for further price continuation here. On the weekly, looking very healthy as well. Any pullback on the weekly, so if let's say we lose the daily in a significant fashion, any pullback on the weekly just going to be for a weekly higher low, potentially into this area, and then set the beautiful weekly uptrend here into the end of the year. Amazon, no red flags as a business. I love their earnings once again. Keep an eye. your 12 EMA on the 4-hour time frame is going to be it for all the indexes and for most of big tech. So no red flags on Amazon. Now let's move down, to Google. So Google up again here today, 0.41% to the upside. Google still trying to set your daily higher low here. Google with 3 legs to the upside. Anything above 135.37 is just going to be a daily higher low for further price continuation here, reacting nicely from our 12 EMA on the daily chart this time. The resistance stays put here, 52-week highs, the 142.5 area. And if we do smash beyond that on this 1 weekly move, we are all the way up to our all-time high resistance area, guys, 152 all the way down to pretty much your current area of roughly 145, right? Previous highs right there. So Google looking very, very, very healthy, if I do say so myself, guys. No red flags. Look at this, guys. Once again, defending this 12 EMA on the 4-hour chart with their lives. They recaptured it again today. After spending a few days below it, we are now back above it here into the close here. So we'll see if the bulls can continue to protect that. No red flags as of yet. Daily looking good. Weekly looking good as well. But if for any which reason the rest of the market pulls back and we get somewhat of a daily downtrend on Google, keep an eye out just looking for a weekly higher low here. In the mid 130s is where I would be looking to write some shares of Google here. 135 all the way down to pretty much 130 for a very, very juicy buy here into the end of the year. No red flags at all. Now moving down to Meta. Meta up 1.28% here, guys. So very, very good performance by Meta. Meta, as we were saying in yesterday's video, 3 nice legs up here, and any move down was just for a daily higher low above 326.50. Seems as though we got it today. Price reaction beautifully off of your 12 EMA on the daily time frame here, guys. So bulls once again playing defense. Weekly, no red flags whatsoever. Your weekly move up, weekly uptrend is just continuing at this point. Meta with no signs of slowing down. Keep an eye on the 342.35 break. If we do get that break, guys, the next level up is 353 for high upside resistance here. And once again, Meta, same thing. You can see loss of the 12 EMA on the 4-hour time frame yesterday. This is what we said in yesterday's video. The reason for a few cracks in big tech's armor. Right back over it today. Once again, bulls proving that the bears cannot hold this 12 EMA for more than a day at a time. So still no red flags in the market. Meta is still looking very good. Now moving down to Microsoft. Microsoft is just a monster, guys. Microsoft again with a new all-time high, up another percent. This move on Microsoft is one of the most beautiful moves up that I've seen in a while here after their earnings, right? Keep an eye, right? From their earnings, from the bottom of the 2 days after earnings, they're up an additional 17% here, guys. Year to date, let me check how much Microsoft is up. Year to date, Microsoft is up 57% here, guys, on the way to new all-time highs. So no red flags whatsoever. Any pullback, keep an eye, 366.92. Any pullback just going to be for a daily higher low for daily uptrend continuation. Weekly, no signs of slowing down yet. The only red flag, guys, that we're getting is slightly overbought here on the weekly. So pullback could be likely at any point in time for Microsoft here. We're just waiting for the bulls to kind of run out of steam, but no real red flags as of yet. Your 12 EMA on the 4-hour time frame is going to be your guide once again for this stock as well. Looking very good. Now let's move on to NVIDIA. NVIDIA with a bit of a consolidation day as well here today. So NVIDIA just trying to find its bottoming out zone. You can see that it's using this 12 EMA on the daily chart as a pretty much magnet right now. The earnings drop is still kind of plaguing this stock, but it wasn't really that big of an earnings drop in the grand scheme of things, guys, right? Some companies have done far worse. NVIDIA still reacting from your previous resistance, which is now support. So this is a very easy area to target, guys, as to why the market is holding here. Keep in mind with the loss of the daily uptrend at this point, we are potentially looking for a lower high here and lower low scenario setup. If that manifests itself, your weekly consolidation simply continues. On the weekly, NVIDIA with tons of space here, anything pretty much above 391 is just going to be your weekly higher low for further continuation to the upside, guys. No red flags in NVIDIA's business as a whole yet. So just keep in mind, guys, they can either do two things. We can either set the daily downtrend right here, continuation for the bears, and then we're just looking for weekly consolidation. Everything is safe, but the bulls have an opportunity to reverse this. Can they V-shape this back to all-time highs? Wouldn't surprise me, guys. It is NVIDIA here, so just keep an eye on that. As you can see, NVIDIA, one of the only few names that's lost this 12 EMA, this yellow line here, for now the past 4 or 5 days ever since their earnings. As you can see, they were doing a great job of controlling it before, but now trading under it. So that is the one thing to watch. NVIDIA, one of your only big tech stocks to have lost the daily uptrend. Now let's move down to Tesla. Tesla had an amazing day here today, guys, 4.5% to the upside. Cybertruck is getting released on Thursday, guys, so keep that in mind here. Tesla The Tesla actually cracking our previous high here, 246.70, beat it by 2 pennies here today. So Tesla continues your daily uptrend here. So we were comparing this with the Russell yesterday, right? How tight the range was getting. You guys could see on the 4-hour time frame, the range was getting pretty tight. And if it broke, it was going to break hard. And it did break hard today, right? So daily uptrend continuation is set at this point after this very, very nice area of tightening range. Now we have broken bull once again. So daily new uptrend is set. Your weekly uptrend, your weekly up move simply continues, right? No weekly uptrend is set yet. We would need something like this to set the weekly uptrend, right? So still trying to recapture more and more of this move. If Tesla moves up into the 250 area, that's exactly where I want to see it. Why? I will reiterate again. That will just mean that they've recaptured 80% of the move down, right? So hit my target here of around 253. You'll recapture 80% of this most recent seller's leg down. And that means that the weekly trend change is highly likely to the bulls. So Tesla, very, very beautiful setup here, guys. I really like the action by the bulls. Now it's time to continue as our last leg here into the 250 areas. We will be dealing with overhead resistance now at this point. 255 all the way pretty much up to about 270 is going to be this very, very hot area of contested price action here, guys. So just keep an eye on that on Tesla. But as of now, no red flags. Daily uptrend is newly set. Need to see some continuation into tomorrow. Would like to see it push into the 250s. Now moving on to Palantir. Palantir, very good recovery day here today, 3.3% here, off pretty much your lows of yesterday. So very, very good day by Palantir indeed. Now, 1, 2, 3 legs. The bears engulf the move. So now, unfortunately, your daily uptrend is lost. We will potentially be expecting a lower high here and lower low setup by the bears if they do get some follow through here, guys. So we are expecting a lower high. This is a pretty deep move down. Palantir bulls can V-shape this, but the most likely scenario is the lower high here. And then we will see. Will the bulls be able to protect this and reverse into a new daily uptrend, or will the bears set the daily downtrend? If they set the daily downtrend and the rest of the market follows, well, then your weekly consolidation just continues. Anything above 1450 is just a weekly higher low for further continuation, guys. Target this area, as I've been saying, 18 down to around $17 is the big area here for Palantir to be protecting here. So if they do pull down into this area here, guys, I am expecting a big reaction by the bulls. Just keep that in mind. As of now, no red flags. We will see the size of this bounce here, and Palantir doing a great job here of recapturing your moving averages here on the 4-hour time frame here. You can see they protected it a lot in the past, and now they have regained it. So 4-hour trend change underway by the bulls. We will see how high can they bounce. The higher the bounce, the more likely for the return of your daily uptrend. No red flags though. And now PayPal. PayPal, beautiful day. Finally, some continuation by PayPal. 3.7% to the upside. Daily uptrend continues. Daily higher low is now set. 55.30 is your line in the sand level. Any move below here is going to be just for a daily higher low above 55.40 area, right? For further trend continuation here. So nice, 1, 2, and now our third leg up. I would like to see this third leg, guys, once again, get up into the $62 range. Why? Because that would give us enough space here on the weekly to set up for your weekly trend change here. That is what I'm looking for here, guys. We're looking for the long-term reversal on PayPal here. Could this be the monthly bottom? We will see. If the rest of the market keeps performing the way it is, very likely that your true bottom has been set here. Going to keep an eye on PayPal here, but some very, very big resistance here. Need to get through this 59.60 area in one clean shot. So going to be looking forward to PayPal using this momentum that they had after today to kind of smash through this area, then come and sit down on this previous area of resistance that we're in right now. Needs to be then used as support here to gain further momentum into the mid $60 range. So everything looking good on PayPal as of now. And now lastly, guys, let's take a look into my portfolio. So guys, now lastly, checking into my portfolio here, you can see that pretty much flat on the week, haven't opened many positions, but we are performing well here, guys. Portfolio up roughly 38.66%. Year to date, keep in mind, we have made about 15% worth of withdrawals. So we are actually in the true 50+% range for the year. Cannot be happier with that. We are outperforming SPY by a wide margin here, roughly over 2x are we outperforming SPY. Cannot complain about that. Always fun to be beating the benchmark, guys. And that's been a regular thing here for me in the past few years here, beating the benchmark. Keep in mind, I have been trading for almost 10 years now, running the wheel strategy for about 4 or 5 years at this point, and always outperforming the market here. So that is what you want to do. Just slow and consistent gains. We're not going for home runs on this channel, at least not in this account, not yet. Market's not ready for it, but I will be doing some long calls here in the future here as we get a few more items cleared up in terms of macro, guys. When inflation really comes back down towards our target here, and when interest rates are confirmed to have been peaked and potentially start dropping, that is when you will see me do a lot more long options. As of now, we've been doing short options for the majority of the year. That's just the market that we're in. And we are still beating the NASDAQ ever so slightly, guys. Beating the NASDAQ, 38.66. NASDAQ up only about 37 here. So we are still beating the NASDAQ. Fairly happy about that. Now let's move on into our positions here for the week. All right, so let's move into our positions for the week here, guys. So you can see that I didn't open too much, guys. Only new trades today, no new trades yesterday, guys. So let's move into them right away. You can see that I did 5 contracts of Palantir here, 18.5 puts. So I'll remind you guys, Palantir, that is in my new sweet spot for the company. 18.5 is right around here. So we'll see if we get assigned by Friday. Not potentially looking to get assigned here, guys, but took a little starter position on Palantir, very, very small position, only for about $40 in premium here, guys. Nothing major, just looking to pick up some shares potentially if we get a dip. Then we also wrote some CELH 50 puts. As you guys remember, we were in this about 2 weeks ago, and then we closed after being assigned. We were in it for about 3 days, and we did manifest 1% gains to the upside here. So very, very happy with that position, guys. Exactly what we're looking for. 0.5% to 1% per week on any assigned position is beautiful trading here, guys. Do that every single week of the year. You should be making 52% per year, right? If you're getting about 1% per week on every position in the account. Now, CELH here, decent position size here, right? So we got 0.5% for the remaining 3 trading days here. Wrote this fairly late into the afternoon. You can see CELH is now pulling back ever so slightly here from the 52.50 range where we got previously assigned. Well, my new strike is now down to 50. So let's move this line right down here. And we got about 25 cents. So I'll change that. But right in our support area, and we do have previous support down here in the lower $47, $48 range too. So we will see if we get assigned on those by Friday here. Wouldn't mind, guys. I do think this is still a good area for the bulls to play defense on CLH. And now lastly, ELF Beauty is one that I've liked to play a lot recently. The 113 puts for Friday here, for 50 cents. So not quite 0.5%, but in terms of annualized basis with 3 trading days left, it is about a 37% ROI per year. So we are going to be looking for ELF to maintain above 113. 113 is roughly this yellow line right here. So we will see if they can play some defense, but that is a fairly good area, guys. It's going to be previous resistance area, should be acting as current support. No red flags for the bulls currently here. So was just looking to make the most of this, guys. If we do get a sign on ELF, I would not mind, because we are just looking to set a new weekly uptrend. So weekly downtrend was confirmed. Now the bulls, with an engulfing move, going to be looking to set the weekly new uptrend. And ELF absolutely killed Black Friday. So if for any which reason, guys, we get assigned on Friday, we will be riding this higher, giving our long-term bulls a chance here. So 118 currently, we'll see if we get assigned at 113. The rest really unchanged, guys. So Baba, you can see still holding our 100 shares. We were assigned at 82 minus the premium here. So Baba trading around 75 right now. CP still assigned on those. Average cost of about 71.9. You can see it's 70.23 right now. We'll be looking for CP to recover here fairly nicely. It is currently in a very beautiful area of support here, guys. So we will see if that can play out as well. Baba, you can see Baba is very, very low, guys. We're pretty much at 52-week lows right now, almost, right? And company has very, very good growth. I'm very not nervous of being assigned 100 shares at this level. I do expect Baba to be able to rally here into the end of the year and into 2024. UPS now coming back to break even again here. 152 is my break even on Interactive Brokers here, but you can see that if you don't remember, my true break even on this is around 145.94. That's after having written covered calls here before earnings, covered calls the week of earnings, and then we collected a dividend that was paid, that was declared here on the 10th of November. So fairly good. We are in profit on the position, but I will be looking to get some premium over 152.50. I'd like to ride this, guys, really into the 160s, and then really write some nice premium on covered calls here, guys. So we're going to be looking to juice the most out of the position possible. PayPal still there, can't write covered calls. Rivian also still there, can't really write covered calls yet, not high enough. You can see my break even here is about 18.33 on Interactive Brokers, but truly with all the premium that I've wrote on Rivian, you can see that we're now above my break even. 17.35 is my break even with all of this credit here, and then we're up to about 17.42. So we'll be looking to ride this, guys, potentially into the $20 range. Don't want to cut the position right away. We'll wait for a little bit. So going to ride this to the upside. TMF almost back to break even as our yields keep falling. The bonds are rallying here. CSIQ still crushed here, especially being a solar play, high interest rates. And now lastly, my HCal. Canadian banking ETF here had a very nice dip here today, guys, but I do think this is the end of the Canadian banking sector being crushed and banking sectors as a whole being crushed, guys. You can see the price is coming down. We are trying to desperately set a new weekly uptrend after having trending down now for the past pretty much, year and a half, almost 2 years at this point. I've been DCAing this entire time. You can see my average cost on 1,000 shares is 19.69, pays a very good monthly dividend, guys, 8.45% pays on the monthly dividend. And the reason I bought more shares here today, dividend is going to be paid on pretty much Wednesday here. So I had to get in today. If you want to collect that dividend, I did pick up another 45 shares and you can see that right here. So bought the dip. Now we have 1,000 shares that will be bringing in some very nice monthly dividends. And when the price starts recovering on this, guys, it's going to be very, very, very juicy. One of my favorite plays in the entire account. I don't talk about it that much, guys, but Canadian banks are some of the strongest in the world here, guys. And it's just a question of time before our Canadian banking ETF gets back here. This is pretty much an equal weighted ETF at this point. So all banks have been coming down. Financials as a whole, even in the US, haven't been too favorable, interest rates and the like. So when we do get into a more favorable environment, guys, going to be looking forward to riding this higher and higher. And now we have a substantial share position here with a very good average cost in the grand scheme of things here, guys. It's going to be very, very juicy here into the end of the year and into 2024. So that's pretty much everything I had for you guys today. Hope you enjoyed the video. If you did, consider dropping a like and consider subscribing to the channel if you're new. Almost 500 subscribers, guys. We will get there. Fingers crossed. And as usual, if you have any questions, guys, leave them down in the comments. Options, stocks, macro, anything you like, and I'll get back to you as soon as possible within the first 24 hours here, guys. So take care. I'll see you tomorrow after the close. That's pretty much it. Take care. Peace.